All right, hello and welcome everyone. Doug here with the LincolnList.com. Today I have a special training session for each and every one of you. I will be talking about the greatest stock training tool known to mankind. I know those are bold claims, but I stand by them. In fact, I guarantee that this stock training tool will make you a more better trader. That's right, I said the words more better. And every trader wants to be more better, right? And I would almost go as far as to say that over 90% of you already have this tool available to you, and it's free. And it's just sitting there begging you to use it and begging you to be more better. So enough of the ranting. Why don't I get down to exactly what I'm talking about? And let's start. Now, before I do that, I want to go back to something I was talking about last week because many of you had reached out to me in the happy hour when I had talked about faith, having faith in your process and faith in your system. And I mentioned something back there that you're going to hear a lot of traders talk about, and that's back testing. And I want to talk about what that really is, what it means to me, how I use it, and why I think this is important. Now, first of all, what the core talk about that happy hour was a trader has to have faith. A trader needs to have faith in their system and faith in their process because they're going to go through bad times and tough times, but they are aware that if they stay with that system and process and they stay disciplined, that things are going to work out. So how do you actually know that? And I did mention something about back testing, and I didn't spend a lot of time on it, and many of you reached out, so this is what we're going to talk about. Back testing is testing your strategy in the past, how it worked in different types of markets, how it works in different types of situations. Now, one of the things that I pointed out is that when you go through a tough time, you don't necessarily need to throw your strategy away. What you need to do is reevaluate the way that you approach that strategy. Now, there's many fancy software programs out there that are expensive that you can use to backtest. There are certain reports that you can run from other financial websites that will give you an insight about where you excel, where you suffer as a trader, so to speak, for a lack of a better word. But I want to give you something here that's free and pretty simple to use for just about everyone, and that is the on-demand feature with ThinkorSwim. So if you guys have ThinkorSwim, you don't know what this is, it allows you to go back into a date in the past, any date in the past, and play back the market as if it were live. Now, some of you may have this. I don't know about other brokers. If some of you out there with like interactive brokers, I don't think they have it, but maybe your broker does. But for you guys out there with ThinkorSwim, that you do have it. And I'm going to tell you why this is valuable. And I want to let you know how I actually use back testing, which may be a little bit more unconventional from other traders, but it's something I've been doing for years, and it's a feature I've been doing for years. And I've had great success with it. Therefore, I've always promised to share my successes or share things that I learn on my 2-decade journey here as a trader. I'll share them with you. So I use these for a couple of different reasons when I'm going to play something back. And it's important the way that you look at this. One will be in a case, a stock that, let me kind of rewind it. I have a tendency to trade the same stocks over and over again. I've also done webinars about that, and I don't have the time to go into why I do that, but I have a tendency to trade those. I trade things like Facebook, Lulu, Apple, Netflix, Nvidia, Tesla, those type of stocks, and I'll trade those almost every single day of the week, depending on who's moving and so on. So I want to go back and I want to take a look at Lulu because I've had a few trades on this, or I've traded this actively during this month. And one of the things I want to look at is when a chart is setting up, like in this case, a chart that was breaking out. So let's kind of put ourselves in a frame that you're seeing a chart that is ready to break out on the daily, that's ready to break out on the intraday. And you want to know how that might perform. What type of a move could a trader expect since maybe it's breaking all-time highs and you don't have a specific resistance number in mind or that's nearby on the chart. So maybe it's an all-time high and it's just sort of rolling. Or you just kind of want to know not just where resistance might be, but one thing that's important that traders overlook is how this stock behaves. So you can look at a chart in hindsight when it's just sitting here like this one is, and you can look at the daily candles and it's sort of easy to read, but it's a much different story when the market is actually open. So what I like to do is, like on this date here on 11/11, this was breaking out here on the daily. And what I'm talking about is it's clearing a specific point of resistance, making a new high, which is this 207. And then the question is, what can a trader expect? Should you start looking for the next whole numbers up? What's the next area of resistance? But to me, what's important about this specific tool is I like to look on how a stock behaves. That's one of the reasons why I trade the same stocks over and over again, because not just where a stock goes from point A to point B is important, but how it behaves in between. Because that way that it behaves in between often leads you to being faked out and shaked out and screwed over on stops and stuff like that. So let me show you how I use this. If I'm concerned, or not concerned, I should say, if I want some information on how a stock may behave on a breakout, I'm going to go back into this daily chart and I'm going to pick something in time when the stock had broken out before that, such as back here on the October 11th. Now, if you go up in the top corner, for everyone that has ThinkorSwim, you go up to the top right-hand corner, you click on the on-demand feature, and it's going to tell you, you've got a lot of other features with this. Now, you can actually sim trade this. I'm not a fan of sim trading, but this is also a great way to practice trading when the market is closed, where you can take these strategies, you can take these ideas that you have, and you can put them back into a time in the past and see how these strategies would work as if the market is playing out in real time. Now, it's also kind of important, well, we'll get to that in a second. Let me just talk about Lulu here so I don't get everyone confused. So you can go up here onto the date. You'll see this is set for December 19th of 2018. So we're going to go to October 11th. And I would just play this back. And you can set the time when you'd want to start and how, whatever time. I would set it. I'm not going to do it here for this video, but I would set it for the open. And I would pay attention to how this thing works. So when you're looking at something like Lulu, you can see that when it broke out to this new high, it first made this initial breakout move. Then it pulled back. Then it broke out again. Then it pulled back. Then it continued to go all day. Now, you may want to take that specific pattern. And the pattern I'm talking about is breakout, pullback, breakout, pullback. And you may want to go back to the next time that thing broke out or was on a big run. Maybe you want to go back to April or May or something further in the past and test it against things that coincide with a very similar chart pattern that you're looking at now. And what this will do is give you clues on the behavior of a stock like Lulu. So in this case, what you're seeing is Lulu has a tendency to break out, but what it also does is has a tendency to fade. So if you kind of match that with what happened today, breaking out again on the daily chart, that's the same thing that happened. You see how this stock broke out, and then it pulled back, then it tried to break out again, then it pulled back. So this type of behavior with Lulu, this breaking out early and taking out that resistance, then coming back in and testing that, making it support, then going again, is a pattern not just on this daily chart, just in Technical Analysis 101, but this is also a pattern that is repetitive in the behavior of Lulu. So you're seeing that this is Lulu. Now, how can that help you as a trader? Well, number one, that would tell you right off the bat, if you miss the breakout, you don't chase it. Because 9 times out of 10, Lulu is a stock that pulls back in the morning. That's what it does. So you would be better off, if you're a scalper or a quick trader, is to short the thing. Now, that's not always going to be that way. But going back into time is allowing you to see how Lulu behaves, and it's giving you these clues. You would rather wait for it to come back to support. Now, another way to use this feature is to practice your theories or your strategies or your ideas in a different type of market. It also kind of gives you a practice for when you may experience that type of market again. So, for example, if we take a look at the market that we're currently in, we're in this really non-volatile, melt up, I'm making a new all-time high every day kind of market. And it's been that way since October. So one of the things that we can kind of run into here as a problem, for lack of a better word, for traders is our inability to shift our biases quickly. This is something I also kind of suffered with too, is that you get used to a certain market and it behaves a certain way for a long period of time. And in market terms, 2 months feels like a long period of time for a trader. So at some point, this is going to change and volatility is going to get injected into the market. You're going to start seeing more flash dumps in the market and stuff like that. And it takes a while, like a week sometimes for traders, to readjust to the new type of market. So what I often like to do is practice in back markets where it was a more volatile, where maybe like last year, where December was just selling off and selling off every day. So what you can do is take those strategies and you can click on that on-demand feature and go back to a period of time where you feel the market was sketchy, or maybe a period of time where you didn't perform very well as a trader because you weren't in sync with the market. And then you can kind of use those clues that you pick up and practice your strategies against that market. So in this case, we can go back to, I mean, this thing goes back for centuries. It seems like that's an exaggeration. It doesn't go back for centuries. But you can go back here, like even November, when things were erratic, lots of volatility, a lot of sketchiness, a lot of selling, a lot of dumps in the market and stuff like that. So one of the ways you can use this, let's give the ways that you guys can use this and how important it is. First of all, this allows you to see how something may work in the future based on how it worked in the past. It's not always a guarantee, but it can give you the insight of a behavior on a stock. So even speaking of Lulu, not just breaking out, but Lulu is also a stock that has earnings coming up. So you can see how these stocks respond through earnings and how they respond to earnings. You can go look at their past earnings. You can watch the tape and watch the action from when they reported earnings and get some clues on how the stock behaves. And you'll be amazed, guys, if you don't already know this. This is one of the big benefits about trading the same stock over and over again. These things have their own type of behavior. And this is a behavior that gives you a little extra edge and helps you to make some more money. This is also a great training tool. So you can go back into time when the market was more volatile, when it was more sketchy, when it was a little harder to read. And you can match your strategies or practice your strategies in that market. That way, if things abruptly change next week or the week after that, you kind of have some practice. You're still fresh. So you can think of like an athlete. Athletes always practice for scenarios and they don't encounter most of them, but they're prepared for it. They've practiced for it. They've rehearsed it. And that's what's important about this on-demand feature. It allows you to go back in time and back test those strategies and practice in different types of markets. Also, a quick tip for this as well is if you just want to randomly practice to keep yourself fresh in different kind of markets, try to go back a few years with something that you don't remember. You don't really remember what the market was doing back then. And then go back in there and just sort of practice. Now, I don't do the paper trading thing, but you guys want to try it, that's a great feature there too. It'll allow you to actually make trades. But the things I use it for right there is number one, to give me an insight of how a stock's behavior, and if I can get an edge from that and how it may react to in the future, and then keeping myself fresh in case we go through a market pullback, a 25% correction. How do you prepare for that? How can you take yourself from today's type of market? And what if next week it starts dropping like that? Where you get those clues? Go back and look at December. Go back and look at last October. Get an idea for how the market reacts and keep yourself fresh, and you'll make more money that way. Again, it is the greatest tool ever created by mankind. It really is, until you get your own algo. Anyway, guys, I want to appreciate it. I hope this video made some sense. As always, if you need help, feel free to reach out to me, support at thethinkorlist.com, or just come to thethinkorlist.com, click on the Trade Room tab and trade with us. Until the next lesson, take care. Thanks for watching.